Welcome to Ballantyne Law, clear, practical legal advice that works.
I'm James Ballantyne and I'm the Managing Director of Ballantyne Law, and today I'm joined by Senior Associate Sidnee Jennings. Today we're talking about something that most business owners don't spend a lot of time thinking about, which is how their business is structured. We work with businesses from startups through to acquisitions, through to designing and implementing succession plans and sale. Structuring decisions made early will follow owners for years.
Usually people come to us after they've already started trading and they realise their current arrangement may be creating tax or asset protection issues, or even worse, after something has already gone wrong.
People spend weeks thinking about branding and other, pretty important things about their business, but they will not spend much more than 5 minutes thinking about the structure.
When someone starts or buys a business, what is the first thing they should be thinking about?
Structuring really comes down to thinking about a few key issues: ownership, control, risk, taxation outcomes, flexibility, cost, complexity. There might be regulatory requirements depending on what industry you're operating in, and certain business types need to be considered or are mandatory for some industries. So who owns the business? Who makes decisions about the business? What happens if something goes wrong? And what happens when you sell?
So it's less about the paperwork and more about planning for the life of the business. Ownership first. Why does that matter?
So from a structuring perspective, we generally know who the key owners or the people with a key interest are going to be. But what people need to consider about is what happens down the track. What if they want to introduce new owners, new capital to the business? What are the implications from a revenue or a stamp duty taxation perspective? You know, if you're thinking about bringing key staff members on into an ownership interest, the type of structure that you have can really impact that. Something like a farm or a family business might want to think about succession planning into the next generation and pass on the business to children. The ownership of the business then becomes quite important.
Control is next. Equal partnership sounds good until decisions need to be made.
It can happen if things go wrong or if things go right, or if there's a disagreement between equal owners. If you don't have some sort of mechanism to deal with deadlocks, then the business can be sunk.
Deadlocks, or particularly not having a plan in place to deal with them, can kill business faster than competition can. Then asset protection. This is often only considered after a problem arises.
All investments, and particularly businesses, carry risk, so asset protection is important if you want to separate the ownership of personal assets, homes and bank accounts and otherwise from those business risks. As any business owner knows, taxation issues are ever present. How the business is structured can change the taxation outcomes dramatically.
Okay, what about complexity and costs?
Well, small businesses generally have a budget, and how you structure and the ongoing costs are a really important factor that people need to consider. There's no point in spending all of your budget just on the structuring alone, but you can usually try and reach a balance between all of those other elements we talked about and the ongoing costs and the complexity of actually operating that structure. I think it's also really important that small business owners have an understanding of. So now we'll cover some of the typical structures we see for small business, and we'll start with the simplest, a sole trader.
A sole trader is just a person running a business in their own name.
So there's no separation between what the person does or owns in their own name and what happens in the business.
No, it's all the same. What about partnerships? We often see friends or family members wanting to start a business together, and partnerships seem like a common entity for them.
Well, when you've got a partnership of individuals, it's really quite similar to a sole tradership. There's no real distinction between what the individuals own and what the business assets are. There's another layer on top of that, is that the acts of one partner bind the other, so you can really get yourself into trouble if one of the partners does the wrong thing and your personal assets are all included in the pool.
Even if you don't agree with the decision.
That's why undocumented partnerships can often end badly.
I think it'd be fair to say that companies are probably what people think is the most common business structure.
Yeah, that's a fair comment, and I think it's important to understand that a company is a separate and distinct legal entity from the individuals who might own the company. And while directors do still have some personal liabilities for the decisions they make, there is a better separation between asset ownership of individuals and the business.
So company structures can make investment and succession better than perhaps an individual partnership or sole trader.
They can, but they can also be a little bit less flexible from a tax perspective than some of the other alternatives.
Trusts tend to confuse a lot of people. Can you tell us what they are really?
I'll tell you what they are not. They are not an entity like a company is, or an individual who is, or a partnership of individuals are. A trust is a relationship between entities. Depending on the type of trust and the terms of the trust, they offer rules about how assets are held and how income or capital can be distributed. What we typically see in the small business context are discretionary trusts, and most commonly people refer to those as family trusts. And trusts can offer for an increased level of taxation flexibility and asset protection.
But flexibility often leads to more complexity.
There might be increased administrative or ongoing costs, requirement for additional tax returns, need to make distributions and record minutes and properly document the arrangements between the parties. So a lot of businesses combine structures. You might have companies as trustees of discretionary trusts or partnerships of discretionary trusts or companies where the shareholders are trusts.
That's why copying a structure from Google really works.
Structures should reflect the reality, the goals of the people involved, the risk associated with it, the growth plans and what the intentions are behind the business.
So structure alone doesn't stop disputes?
Having the best or most appropriate structure in place doesn't mean there's not going to be problems. What we really need to look at is putting in place agreements between the key people to a business, whether that be through shareholder agreements or partnership agreements, depending on the structure again. And those things can deal with a number of factors, including decision making, they can deal with control, they can deal with dispute resolution or what happens in a deadlock.
So it sounds like the structure protects the assets, the agreements protect the relationship.
Yes.
We often work closely with accountants when it comes to structuring.
Yeah, I think it's really important for us. We give advice about the structure and then we might not see the client again for some time. It's the accountants that have to deal with these structures and the taxation returns on a quarterly or annual basis. So we like to work with them to get their input into what the most effective structure might be for a client.
It's also worth noting we can talk big picture and what structures might be best for a client that we can tell, but we're not lodging their returns. We don't know how much that client is earning or turning over in a year, and it may be that the most tax effective outcome for them cost-wise is not a more complex structure. Okay, so if someone is starting or buying a business tomorrow, what would be your first advice?
Well, I think copying a structure from Google or using ChatGPT to put something in place is probably not going to lead to the best outcome. Speaking to your financial, accounting, legal advisors about what your objectives are, what your exit strategy is, will lead to the best possible structure at the best possible price and level that you can afford.
Yeah, get advice early because restructuring later can be expensive.
Absolutely.
For more legal insights, subscribe or visit ballantinelaw.com. We're here to help.